The federal government's CPI inflation report just came out, and it's a doozy. We're sitting at year-over-year inflation of 8.6%. This means every single dollar that you may have stuffed in a mattress or under your pillow or even in a savings account at your local bank now has 8.6% less purchasing power than it did at the same time last year. Probably the biggest concern of mine over the last couple months as inflation has been raging is what do I do with my money, all this cash and savings that I have, so that it doesn't just keep getting eaten up by inflation. And now with the stock market officially in bear territory, the S&P 500 is down over 20% from its peak. Really, there's not a whole lot of places you can put your money where it's not going to lose value, or at least over the last couple months hasn't lost a lot of value. And the general rule of thumb that you need to keep anywhere from 3 to 6 months of expenses saved up in cash at any time, so that if you're let go from your job or you have a medical emergency or your car breaks down or you need some home repairs, you're able to address those issues without going bankrupt or having to sell your house or having to make any major financial changes to your lifestyle. So in this video, I want to talk about 3 different financial situations that you might be in right now, and what are the best savings accounts or bank accounts or places to store your money at this time, given the crazy economic situation that we're in right now. If you're in a position where you just need a place to keep a basic savings account for a rainy day buffer, really this is that 3 to 6 months of expenses saved up that we talked about. You don't really have a specific use in the short term, but you may need to access it, at random times for any incidental expenses or issues that come up. You might have a large amount of money that you need to keep for a larger purchase later down the road, and you have a good idea of what this purchase might be and when you might need it. So this might be college or house or a car. So in this situation, you won't need to touch the money in the short term, but you do have a planned or set time that you're going to need to access it in the future. Situation number 3 is somebody who may be sitting on a lot of cash because they sold their positions in stocks or crypto, or somebody who just has a large amount of money coming in each month that they normally would invest in the stock market, but you may be a little bit worried to jump in right now because there's a looming recession on our hands and you're a little bit nervous about that. So maybe asking, why don't I just keep this in a regular savings account, right? Isn't that what a savings account is for? And kind of, right? Except it's just a bad place to do it, especially in a really inflationary environment. So your typical savings account has an annual percentage yield, or APY. This is how much the bank pays you to keep the money in the account, of about 0.05% per year. So if you had $10,000 invested in the account or placed in the account, over the course of an entire year, the bank is going to pay you $5. 5 whole dollars, that's it. So probably not the best place, especially if inflation's at 8.6%. And yes, there are definitely better places to stick your money, and that's exactly what we're going to walk through. But before we continue, I just want to ask you guys to take a second to smash the like button, subscribe to my channel if you haven't already. It would really help me out. I'm getting close to 100 subscribers, so anything you guys can do to help me out here would be much appreciated. All right, let's jump into my top 2 choices for somebody who's in the first situation we talked about, which is, again, somebody who's just looking for some place to store their money for their rainy day fund or that 3 to 6 months of expenses. So starting off with number 1 here, we have SoFi. So SoFi is a great institution. They started off doing student loans, but have since expanded into a couple other areas. And they have a fantastic bank account here with 1.25% APY with no account fees. So really fantastic savings account with a couple of really great benefits. So again, no account fees, which is really important to consider. You can get paid up to 2 days early, and you can cash in on up to $300 when you sign up and set up a direct deposit and deposit $5,000, and they'll give you $300. So pretty cool sign-up bonus. So you can see here, the average checking account in the US is only paying 0.03% APY, and then SoFi is paying 1.25% APY. And one really important thing to consider when you're looking at bank accounts is something that's FDIC insured. So that means if there's a run on the bank or the bank goes under, the federal government's going to insure all of the money that you have in there up to $250,000. Now, some startup companies and other fintech companies may not have this coverage. So SoFi does, which is a really good sign. I would definitely stay away from banks or financial institutions that don't have that. And SoFi has a fantastic debit card. They have mobile banking. Again, this is really a tech-forward, tech-first company, so there's a lot of great benefits for this account here, so I highly recommend. And the second best bank and option here is with Ally. And many of you have probably heard of Ally before. They've been around for quite a while. And they have a fantastic account that provides an APY of 0.9%. So not quite as high as SoFi, but still really good. This is a really well-established institution and highly recommend. This comparison here that you can see, this is really indicative of what you get with some of these traditional older brick and mortar banks, right? So they have monthly maintenance fees, they have minimum deposits. See, anything with a monthly maintenance fee is something you should definitely stay away from. It's not worth it. There's no need for a bank to charge you that money. And you can see through banks like Ally and SoFi, they're not charging maintenance fees, they're not charging minimum deposits, and the cash that you're going to get from this is significantly higher. And some other fantastic benefits with Ally, you can see they have a really good online and mobile app here where you can use buckets to organize your money, you can visualize what you're saving, and you can divvy up your savings without multiple accounts. So this really helps you know where you're spending your money and what you're saving money on. So really fantastic options here. Highly recommend Ally. Now the next banking option I want to talk about is CDs, or certificates of deposit. Now CDs are really fantastic for somebody who knows exactly when they need to use their money and don't have an immediate need for that cash. So if you need the money in 3 months, 6 months, 9 months, 2 years, 3 years, and you're worried about a lot of risk, don't want to stick it in the market, CDs are a very low, if not zero risk way to get some sort of return on your money. Now sticking with Ally, since we were just there with the savings account, their CDs here are a really great option. You can see that they have available terms from all the way from 3 months up to 5 years. Depending on how long you're willing to give them your money, you're guaranteed this annual percentage yield, this return. So that's kind of the deal with a CD, is you give the bank your money for a specific predetermined amount of time, and they will give you this return on that money. So if you're willing to give Ally a certain amount of money for 18 months, they'll give it back to you along with an increase of 1.75%. And if you decide to take out the money early, there's usually penalties associated with that. So I'd really advise, if you're going to go down this route, to make sure that you're okay giving the bank that amount of money for whatever time that you decide upon. And probably even stronger in the CD market right now is Capital One. These were the highest rates that I could find on the market right now. So Capital One has 1.5% APY for 1 year and 2.1% for 2-year online CDs. So really strong here. Again, all of these are FDIC insured, just like a savings account would be. So it's guaranteed. There's no risk involved here. And this return is guaranteed. So even if the stock market crashes to zero, you're still going to be able to get your money here and you're going to see some increase. And what's great about Capital One is they have this handy little calculator here. So if you want to compare whatever CD term to the APY that you're going to get, let's say for $10,000, you can see, okay, if you want to leave your money with them for 24 months at a 2.1% interest rate, at the end of those 2 years, you're going to have $424 extra dollars sitting in your account. And now for the final scenario we talked about, somebody who maybe has a certain amount of money that they've sold in the stock market or got out of crypto early enough to avoid the massive decrease that we've seen over the last couple of months. You're sitting on a certain amount of cash and you really want to beat inflation. Again, inflation is 8.6%. How can you do that in a safe manner, especially if you're worried about the stock market crashing even further? Well, there's a fantastic option for you. It's called iBonds. And this is basically buying treasury bonds from the United States government. So if you go to treasurydirect.gov, you can see what the current rates are for iBonds. And at this point in time, so these rates change every 6 months, but at this point in time, the iBond is at 9.62% APY. So an iBond is a security that earns interest based on both a fixed rate and a rate that is set twice a year based on inflation. The bond earns interest until it reaches 30 years, or you cash it out, whichever comes first. So you can leave your money in this as long as you want, or you can leave it in for a short amount of period, whatever makes the most sense for you. So probably the biggest catch here, though, is in a calendar year, you can only purchase up to $15,000 worth of bonds, and that would be $10,000 in electronic iBonds and $15,000 in paper iBonds using your federal income tax refund. But this is probably the safest option unless you're worried about the United States federal government actually collapsing or the dollar going to zero, these bonds are going to be your risk-free asset here, and you're guaranteed, at least at this point in time, a 9.62% return, which is beating inflation. So in an inflationary environment like this, keeping cash in a savings account or under your mattress is probably not the best idea unless you've optimized that bank account to be getting the best rate you can possibly can. Like SoFi at 1.25% APY is a pretty good option, as opposed to just losing 8.6% of the value of your money every single year. But I did show you one option, which is the iBonds, where you actually can beat inflation in a risk-free way, but there's a little bit of a caveat in that you can only purchase $15,000 worth of this asset each year. But in a market like this, there really aren't too many safe options. You know, normally it'd be a safe bet to stick your money in a low-cost S&P 500 index fund, but with the market where it is right now, who knows where that's going to be 6 months from now. All right, guys, I really hope you enjoyed the video, and I hope it was helpful for you as you're navigating your options for what to do with any sort of cash or savings account that you have right now in this wild and crazy environment. So please don't forget to smash the like button, comment on the video if you have any questions. I will do my best to answer any questions that you guys have. And then do me a huge favor and subscribe to my channel if you haven't already, and help me get to 100 subscribers. So really appreciate everything you guys do, and I will see you guys in the next one.